The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Lobsher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Lobsher. Thank you so much for joining me for another episode and spending your most valuable resource, your time, once again with me. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got over 1,000 podcast episodes, 4 books, reports, webinars, and much, much more. And if you want to sign up for the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo, you can do so at cashflowninja.com/subscribe. That newsletter goes out weekly. I've got a fantastic show for you today. I'm joined by Hunter Thompson with Asym Capital. Hunter, it's great to see you again.
It's an honor to be on. Been too long, my friend.
Absolutely. One of the originals, when we launched our podcast, and I've been kicking it now for 8, 9 years. So it's been a ripper. But for the new listeners and viewers that's not familiar with you and what you do, can you please share a little bit about your background and journey with them?
No, listen, I will, but I'm telling you, I'm here to say I am disappointed. I am disappointed, and sometimes it's going to be with the listeners of the show. The opportunity you've been waiting for is happening, and I'm not seeing enough activity, and I'm trying my best to take advantage of it, and I'm calling myself out as well. I'm here because I'm trying to do my part in helping the audience here get wealthy during this once every decade, maybe multi-decade thing, and we're going to talk about raising money, but to me, it's like buy when there's blood in the streets. In my industries, there's blood in the streets, and it's on. So for those that don't know me, my name is Hunter Thompson. I raised around $100 million of private equity for investments. And I started, like most people start, by failing miserably on my first capital raise and then struggling to find the answer to the ultimate question. How can I attract leads versus chase them? How can I sell one-to-many versus one-to-one? How can I use automations and systems that work for me 24/7? And I spent the last 15 years of my life trying to answer that question. And that's what we're going to talk about today.
Awesome. Yeah, for folks that have not listened to a past episode of Hunter Thompson, go to cashflowninja.com, put in Hunter Thompson, and you'll find a ton of value from all the conversations that we've had over the past 8, 9 years. It's been great. So if you're if you're looking for ideas to, #1, get after it, recognize the opportunity, and then grow and scale your business in the next year, this is what you want to listen to right now. So I'm excited. I always learn something from you. You'd mentioned a once-in-a-lifetime opportunity. What are you seeing out there in the world? What are you seeing out in the economy and in the marketplace? What is it that you see happening, and what's going on, and what is that opportunity?
So I have a bit of a knack for identifying trends. And for the trends I'm about to talk about, it's going to be very easy to see them in hindsight. But in the past, the trends, to be early into these sectors is material, and timing matters. And so I'll give you a couple examples, and I'll go way back. In high school, I was from Memphis, Southern rap was getting really popular. And then I felt this thing like electro started to get popular. And I wish NFTs were available at the time, but I had this thought in my head. If you could bet on someone like David Guetta and Lil Wayne partnering together, I have this vision in 2012. I had this vision that this is going to happen. There wasn't a way to bet on that, but that was a trend that I focused on. Before that, I also played a lot of online poker, and like that was the ultimate mega trend. That was the first trend that I really did make some money on, which was the explosion of the poker boom, which resulted in a multi-billion-dollar international sensation, culminating in billions of dollars being generated. And I was one of the people that made, tens of thousands of dollars a month and was able to avoid getting a college job because of it. But towards the end of the poker boom, something called Black Friday happened, which is where the US government shut down all of the online poker sites. Everyone had to get their money returned to them. And one of the sites was like, oh, we don't have any money. And so that was a massive Ponzi scheme. It was full tilt poker, I should say. A lot of poker celebrities got burnt by that. And so that created this massive bust in the poker industry. I got out of that industry, and it was exactly the same time that real estate corrected. And so that was kind of my story of like following trends, focusing on trends and seeing opportunities and going all in. I was able to get all in on real estate at one of the best times, but this time, my friend, might even be better. And I'll tell you why. What's happening right now in real estate is that the best markets, the most competitive ones that are competitive because the fundamentals are the most sound. And I don't mean volatile metrics. I'm talking about population growth, job growth, income growth, rent growth, things that are readily available. The Tampas, the Dallases, the Houstons, the Phoenix, the best markets in the country were bid up to the point where you couldn't make deals pencil unless you used floating rate debt. And then in 2022, the Fed raised rates faster than they've raised them in 40 years. And it created massive distress across the best markets in the country, even though the fundamentals remained relatively unchanged. And that is why I think this might be better than 2008, because employment is high. Banks are not frozen. And yet there's 20 to 30% discounts, which is historically significant. And I want to be able to be there to buy when you can borrow money because banks aren't frozen. But when the metrics are so compelling, you just know this opportunity is not going to last. That's what I think we're in the middle of right now.
So you had mentioned this opportunity multifamily, right? So that if you just think about it, you had mentioned that time frame, 2008, 2009, and let's just say, around about 2011, 2012, you had your bottom. And then, we had 10 years, an unbelievable run until I think it was Q3 or Q4 of 2022 when those interest rates just popped, right?
Yep.
And at that stage, what you're referring to is that there's a lot of deals that, there's a bloodbath, right? In that niche, because a lot of these deals were underwritten with floating debt, thinking that interest rates were just going to stay exactly where they were, low forever, which nothing lasts forever. And that's now where a lot of pain is in some of the best markets.
Absolutely. Even if they're doing well in operations, right? And that's something you got to give credit to these people for. Even if your property is 95% occupied and you gained net income by 20%, meaning you executed probably the perfect business plan. If your interest rate doubles, there's no path for you. There's no path for you. You've got to put more money in the deal. You got to extend. You got to pretend. You got to do whatever you can to keep the property. And eventually, borrowers, aka the buyers or the lenders, will stop having patience. And it's happening right now. And so we're buying a deal right now that is fully stabilized, where there's not even a ton of room to even raise rents or increase occupancy. But the seller is selling at about a 22% discount to where it would have been just 24 months ago or so. So that is an incredibly rare scenario that is going to not last, but in order to actually capitalize on it, you have to be able to raise the capital. So to me, a lot of listeners of this show, they know that there's a massive opportunity. The question is, how do you actually do deals? How do you raise the money? How do you buy bigger and better assets? You got to make the cash register ring to do that.
It's interesting because a lot of those deals were underwritten too, like 2, 3, 5-year exits, right? So they're kind of how they looked at those deals when they were getting in. Were at that stage was like, okay, we're going to go in, add value, increase the occupancy, raise rents, do some renovations. Not a full full, complete gut rehab, but do some things, upgrade, perform some upgrades, and then eventually the exit would be, like I said, 2, 3, 5 to 5 years they'd be out. So they think, well, if rates just stay around the same in that time frame, we'll be okay. But it didn't. So those are the ones that you're talking about, right?
Yep, that's exactly right. And this is just something that is clear as day to me. It's clear of as many of the buyers here. But like I said, I don't want you to see this, watch it happen, and then 2 years start to get into the game. I want you to do it when it's hard to do it, which is right now.
Right. What are some of the biggest challenges that you see? You say it's hard to do it right now. What are people running up against, taking advantage of these opportunities?
I mean, look, when you're just getting started, no one takes you seriously. And so brokers don't even take you seriously. They're going to send you deals that are cherry picked, or they're not going to send you deals at all. Investors don't take you seriously because if they're seeing distress in the market, they think it's a good time not to invest. They're like, holy crap. Like, trust me, when I started my business in 2012, my family was like, why would you go into real estate now? Right? And you can't help it, right? It's a cyclical thing. Now, some of that is because of the emotional component of investing, but some of that is not. Some of that is, if you're going through financial hardship, you may be eager to invest, but you financially can't. I mean, that's the reality of what happened, particularly in 2008, where it's like, yeah, dude, I get it. Go right when everyone's looking left, but I didn't get my bonus this year. My friend just lost their job. My wife just lost their job. Like, whatever that is, I just had to pull my kid out of college because I can't pay for tuition. That's a significant recession. So I get that you're on the internet telling me to go all in, but I'm all in on my monthly expenses right now, dude. So yeah. I want to give some credit to that. But in today's climate, really the X factor is, can you lead investors to confidence to make decisions? Can you put yourself in a position where you're viewed as an expert, where you can overcome some of the negative headwinds that the mainstream media is creating? Like, I'll give you a perfect example. You and I were just talking offline about the election. It's unclear whether there would be an immediate reaction in the stock market, in the treasuries, to a Kamala win. We'll never know. But the reality is, most likely, it was wildly overblown in the short term, the difference between the two candidates. But don't say everyone's an idiot. Create content that you can lead your potential investors to that decision. And even if we get through the election and you've been hearing people say, I don't want to invest until the election. I don't want to invest until the election. Now that election is over. So take advantage of that. Create content to say, now the election over. We have the path forward. Click here to learn more, book a call. So I just want people to stop taking a passive approach and start listening to their audience. What are their pain points? What are their concerns? What are their fears? And how can I create content to overcome them? Now, MC, you've done a great job of this, but people may see you and realize you've done a ton of episodes. What episode are you on right now? What's the number?
We've done over 1,000 podcast episodes between the shows. Yeah.
My man, I have number 1,000 coming up sometime in a month. And so you don't have to do 5 or 8 years of podcasting to get a result like this. Everyone on here that's listening to this can go and record 10 self podcasts, solo episodes, where you're addressing the top 10 concerns people have about your investment. That will make your sales process easier. It forces you to get a microphone, and then you host them on your website, and people think you have a podcast, which you do. There's just only 10 episodes. So I'm not saying do 5 episodes for a week every single day until you die. I'm just saying start to build that platform, because that's the beginning of selling one to many for you.
Business owners, are you interested in creating your own family office and multi-generational financial strategy in 45 days without high-cost advisors, endless meetings, tedious paperwork, time-consuming processes, or ineffective strategies? In the Family Polaris program, I will help you establish a family office strategy for your family that will guide your family's legacy for generations in just 45 days. In 6 weeks, you will establish the 5 Family Polaris core elements: family legacy assets, tax, legal, and insurance structures, the family bank, family asset management, and the family mastermind. The Family Polaris will have a weekly video curriculum, live group coaching calls, and presentations, along with an interactive community. 1 week will be dedicated to each core element, with a 6-week reserved for finalizing your family office strategy. The Family Polaris will share strategies to create generational wealth and leave a legacy for your children's children. You can apply to join the program at familypolaris.com. That's family, POLARIS.com. I'll say this too, from a global perspective too, and having conversations with people around the world. I've got friends in the Middle East and Europe and South Africa, Australia, all over the place. And I can say this, that what I'm hearing too from people that I regard very intelligent to be very intelligent is saying that the US is a fantastic place right now. And this is some of the comments that I'm hearing. So this election is done. We were talking about, people call it the Trump bump, where there's a lot of activity and kind of like there's more clarity, right? Regardless of what your opinion is of him, the election's over, so it went this way. So now everybody's kind of adapting and playing to that. If you look at the rest of the world, I mean, the Middle East is a mess. It's been a mess for a long time. So there's a lot of uncertainty. We just had a government being overthrown in Syria. So you've got all, and of course you've had the Gaza issue, Israel and Gaza. There's a lot of stuff there. Then you look to Europe. It's a train wreck. We don't know how long the British government, the government, the Starmer government, that might fall probably in 6 months. His unpopularity is something which you haven't seen unless you look across the pond there, the English Channel, and you look to France, where there's Macron is just as unpopular. So I mean, pick your country. It's a train wreck in Europe. Then you look other places in the world. I mean, everybody's got issues, but at the end of the day, too, I mean, just look north in the U.S. with. As the time of recording, Trudeau is, there's rumors that Justin Trudeau is going to resign. So in a world that is collectively kind of gone mad, you still look at where do you place capital. And for most of the international folks looking at this and saying like, hey, you could still park some capital in dollar denominated assets, generating dollar returns in a place that looks pretty much open for business again. It's not a bad environment to still look. And again, to your point, a lot of these friends of mine that's overseas, they're looking at the markets that you're looking at. What's going on in Florida? What's going on in Tampa? What's going on in Arizona and Phoenix and so forth? All those markets, because as you mentioned, there's a lot of variables that didn't change, right? The quality of the assets and the demographics, jobs, the fundamentals.
It's crazy because obviously you and I share a lot of similarities in our worldview.
Yeah.
And so it can lead you to be like, oh my gosh, like America is doing a terrible job. And there's some truth to that. But like, there's a reason billionaires and centimillionaires are not only trying to invest here, they're trying to send their children here. And it's because of the culture, which is why we're doing better than Europe. That's the reality. Now, it makes me cringe a little bit because there's so many problems with the culture in America and the next generation. And we've heard this stuff over and over again, but just look at it objectively. He can break it down by continent. What are you going to do? Invest in multifamily in Syria? Like, yeah, I got a 12 cap. Yeah, but who's going to lend you money? Who's your buyer and seller? It's such a tradable market. It's such a predictable legal system that you've got to just shed that libertarian worldview where it's all about retreating and figure out how can you go all in when it demands capital and confidence. And while the United States to some degree is probably certainly the most large country with that kind of capitalist view, there are other countries as well just dying to flush money here. So you can buy the assets now while they're trying to work their way around the legal system in their respective countries and front run that international play. And I think that's only going to continue one direction. Because look at it. If you actually look at the difference between the US stock market and the European stock market, usually they track 1-to-1. And the US stock market has been running circles around Europe. Now, if you're uninitiated, you might be like, well, that's because of the money printing. What do you think the ECB's been doing? They're all playing the same game. It's just that the freaking spirit of US capitalism is second to none, right? Now, you can also look at the international element as the kind of US global dominance based on military, which results in their dominance based on the dollar. But listen, you can hate the game, but not the player, my friends. I am here to win for myself and my family, and then to others, and in that order, likely.
Yeah, and to your point, the Florida market too, that's where a lot of the capital's coming from Latin America.
Yeah.
So, because again, where do you park cash over there as their currencies are devaluing? And, again, protecting value and growing wealth. I had this conversation with a friend actually in South Africa of just if people realize how the actual global financial system works, I mean, and you're sitting in a different currency, you have to try and figure out a way to get some sort of US dollar denominated assets that produces US dollar denominated income in your portfolio. You just have to, because every single country overseas, when they borrow money from the IMF or the World Bank, it's denominated in US dollars.
Yeah.
So they have to convert their currency to dollars. There's always a demand that drives it up. So you're literally, it's math. It's going to always be math. You're in a losing game if you're in a different currency against the US. So yes, there's a lot of folks here that have a lot of negativity of we're printing too much money and inflation's too high. Compared to what? Compared to the rest of the world. I mean, you're still in a different side of the coin than the rest of the countries around the world, right?
One thing I'll say there is that the bond market for negative interest rate bearing bonds is in the trillions. Meaning that if the investments go to plan, they will lose money. If they go to plan, they will lose money. So it's up to you to rise to the occasion and be loud enough to attract people that are looking for opportunities, and recognize that if you have good, favorable, risk-adjusted opportunities, there's way less of that than there is money searching for yield.
Yeah. Let's talk a little bit about marketing, because another trend that you caught, and I was happy to catch on to that one too on the marketing side was podcasting, right? That was up and coming. I mean, when we started and you with Cashflow Connections, we had the Cashflow thing in common. I remember people ask me, what's a podcast? What is it? How does it work? My first one, fun fact, was, I was listening to the Peter Schiff radio show online, and he said, hey, if you miss a show because it was live during the day, go to iTunes. I believe at that point you can download and sync the MP3s on this iPod. This is where the podcast came from. But anyway, that was a huge trend just in the beginning to catch that too, from a marketing standpoint. Any comments on that? And then from a marketing standpoint, what are you seeing out there now for all of our business owners?
Yeah, so I got to give a shout out to a good friend of mine, Reed Goosens, who we've done quite a bit of deals for. The that don't know, he's done about $750 million worth of multifamily, and he's a good friend of mine. I'm very lucky for that. He basically started to see great results from his podcast, and he said, you're just leaving money and influence on the table if you don't buy a $300 microphone and start recording conversations you already want to have. Yeah. It was a total no-brainer. And so I started, and I don't remember the exact year, but I want to say it was 2016 probably. And, the first interview I did was with Jeremy Roll, who's another mentor of mine. And we just ripped for an hour about passive investing. It was very detailed. It was not suitable for a first-time listener, a first-time investor, but it attracted some really quality, high buy-in accredited investors. And so I almost immediately started seeing results. Now, that's not how it is in today's climate, where you anticipate doing a show for quite some time until you see results. But that's one of the benefits of being early on a trend and being right. Now, I will talk more in detail about the podcast thing, but there's an underlying message here, which is that that's a trend you know about. You don't know all the trends that I started and didn't work and I moved on, but think about it as an entrepreneur. if you're sitting on the sidelines and like two people, hopefully I've gained some of your respect during this interview, and I know you respect MC. We're screaming, do it, because the risk is so low, guys. It's just so low to buy a quality microphone and reach out to someone you have a lot of respect for and hit record. That's the worst case scenario, is no one listens to it. But I have found, I'm sure you would agree with me, even if I found today that all of our millions of downloads was just my mom clicking refresh, which might be the case, by the way, I still gained a ton because of my knowledge, my contacts, my awareness. People know me. I know great people, all because I had a platform that I developed and just the knowledge that I got from listening to those people say amazing things. So I'm still in 2024, 2025, shouting from the rooftops, go all in on media. It's hyper scalable. It allows you to sell one to many. It makes your sales process way more streamlined. And I can't tell you how much happier anybody that works for me, if they're on sales, if they say, oh, Hunter, I downloaded like the last 100 episodes and I ripped through them all. That's the easiest sell in the world versus, okay, what do you guys do? You guys scammers? You guys Bernie Madoff people? That's a very different conversation with a very different customer journey.
So they get to know, like, and trust you. And podcasting is just one of these channels, by the way. So you've put out some great books too. I know we've had many conversations throughout the years about that. So that's another channel. And and then there's other emerging trends, right? I'm going to pick your brain a little bit about TikTok, not TikTok, LinkedIn, but first, like TikTok. So I have not been on that at all. And I eventually had an assistant that she's like, what are you doing? You need to do some TikTok. We started doing some of that. I never thought that would be something I'd be into, but short form stuff. And there's thousands of just downloads and views within the first couple of weeks. My mind was literally blown. So there are so many opportunities, like you said, out there. So you got to be strategic. And just a comment on that. And I know you guys are doing some great stuff on LinkedIn too, as a tool these days.
Totally. So LinkedIn is really powerful, especially for targeted marketing. So for example, one of the things, and I have a capital raising coaching arm of our business where we teach people how to raise money. And so one of the things we're talking about right now is that you don't even need a website. You just need a LinkedIn account, good photography, a quick bio, and a call out of who you want to serve. Some people want to serve people that military veterans, some people that want to serve high income dentists, some people that want to serve people who just recently went through an IPO. And so they put that on their LinkedIn, and then they go use a software called Sales Navigator where they can target people that meet those descriptions. Let's say you have a background of working at Deloitte. You can target managers or above that work at Deloitte, send them a friend request. By the way, recent data suggests that you shouldn't send a message with those friend requests. I was surprised to hear that, but that's the data.
Really?
Yep. It's because it closes the loop. The curiosity isn't there. So just send a request. Hey, we both used to work at Deloitte. Just send that request. And then afterwards, the strategy is don't DM them trying to book a call with them or pitch your service. I recently interviewed someone that said the strategy is to try to make their day. And so what that means is it takes a bit of time. Spend an hour, look at their profile, see where they recently promoted. Did they recently go on a vacation somewhere? Just try to make their day. It's not scalable. It's not something you can replicate and do 1,000 times a day, which is why they know it's going to work. And then, hey, congratulations on the recent promotion. Holy crap. That's a hook to potentially continue a conversation where you can then qualify them, talk briefly about what you do, and potentially book a call. And like we're seeing people send out 100 requests a day or something like that, multiple messages a week. And eventually, you get 2 to 3% of those people to book a call. You're filling your calendar up with qualified leads, and they're qualified because of their title and the company that they work for. So that's a strategy. And another software we use is Expandy to help automate some of this. But the combination of those two things, without a website, you can start to see results in 30 days.
Wow. And then from an automation standpoint, this is one of the things that's your specialty too. Obviously, you're going for quality, not quantity in that strategy. What are some of the other things that you guys are doing as far as automation and so forth on your marketing?
So we have an event coming up called Raise Fest, this is going to be a main topic where we're going to talk about how to build a system, how to build a business that is a capital raising machine. And this, what we're going to talk about at the event is not, you got to work 80 hours a week, bro, just put in the work. That's not it. It's how you get to work 24 hours a day and never make a mistake. And the answer is automation. So by the way, if you want to learn more about that event, raisefest.com. It's going to be in Phoenix. It's going to be amazing. So the question is, can I create sequences, whether through a website or an email provider or through text messages, that attract clients, keep them warm, automatically book calls, what to say before the call, what to say after the call to make the sales process easier? And I'll give you a couple examples. If you've been hearing that your potential investors don't want to invest with you because interest rates are too high, or because there's recession coming, or because real estate prices are down 25% in your market, rather than A, ignore it, or B, tell them that they're stupid, you can get in front of a lot of that. So like now we're using multiple strategies at the same time. Do those 10 podcasts that we talked about at the beginning of the show in a drip sequence after someone books a call. Maybe in the lead up to the call, you're dropping in those things that are knocking down their limiting beliefs, so that by the time they get on the call, they've had most of their questions answered and they're just there to see if you're actually a real person. Then after the call, hey, immediately automation kicks in. Thanks for the call. Per the call, we have this deal that's currently available. 3 days later, hey, the deal's 85% subscribed. Like, that's how I've been able to raise $100 million with a very small team, is by leveraging automations that actually work and work for you without you working.
My new book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, just hit #1 on Amazon. So Get Wealthy for Sure is an Amazon #1 bestseller. In this book, you'll learn the wealth building secrets that the ultra rich have used for over 170 years. You'll learn how to create your own banking system using a dividend paying whole life insurance policy, allowing you to finance your business growth, invest in lucrative opportunities, and build generational wealth, all tax free and protected from market volatility. You'll also learn the proven strategies used by icons like Walt Disney, the Rockefellers, and top CEOs to grow their empires and get wealthy for sure. You'll learn how to build a team of expert financial professionals, implement tax-efficient strategies, and protect your assets from creditors. You'll also learn the power of thinking like the wealthy and aligning your capital for maximum impact, so you can take control of your financial destiny. I also share a step-by-step aligned capital strategy that will guide you to a life of certainty, clarity, and predictability without falling victim to misinformation or settling for the status quo. If you want to get a free copy of my book, Get Wealthy for Sure, and only pay the shipping and handling, you could go to getwealthyforsure.com. That's getwealthyforsure.com. What are you seeing with AI? Because that's another thing that's, I mean, talk about a game changer and some disruption with regards to marketing, and then also in real estate. I mean, this is going to just swallow the world, right?
One of my good friends, Catherine Bell, is crushing it with the AI thing. And if you go to raisingcapital.com, we're probably going to do something about AI soon. So just take a look at it. But at the simplest level, everyone should be using ChatGPT just to generate ideas about what they should be talking about to their people. So like at the basic level, go to ChatGPT. You want to cater to dentists, 7 things dentists don't think about when investing in blank. And like, that's it. Let it rip. Educate them through content, right? And then on something more advanced and experienced, I mean, dude, I uploaded my book, Raising Capital for Real Estate, to Google's kind of AI reader. It took about 3 hours, but 3 hours later, I was able to ask it any question about raising money. And Google's thing created a 15-minute 2-person podcast That's an interview style podcast where it's a guy and a girl interviewing each other about my content. So how does this apply to real estate? A couple of different ways. Every single quarter, Marcus and Millichap puts out a national housing report about multifamily. It's like 50 pages. You can just drop that 50 pages into Google's Reader and then listen to a 15-minute podcast when you're driving around. That to me is like the next level. One more advanced one. You can create, let's say if you do what I'm talking about today and you start creating your own podcast, I've got 1,000. Listen, dude, it's possible, MC, for me to go and download all your transcripts, or at least download the audio, upload them to rev.com, get the transcripts. I can then upload that to a reader, and I can have my own personal MC LobShare chat autoresponder. Or I can ask MC, hey, what are the top 5 mistakes people make when investing in life insurance or getting a life insurance plan? And boom, I've got personal access to you based on the 1,000 episodes you've done before. So just start thinking about this stuff. How can I use mechanics, automations, and systems and processes to make my life easier and to get my business more results? That's some stuff I'm working on right now.
And especially from a content creation standpoint, like you were saying, the ideas, and I mean, it's incredible what you can come up with these days. I mean, it's unbelievable. You could, if you're listening to this, and we've talked about real estate, capitalizing on one of the biggest opportunities right now. We've talked about trends. We've talked about marketing, social media strategies. We've talked about like AI. We've packed a lot in now that I think about it. But I mean, you could literally go to ChatGPT and say, can you help me craft a marketing strategy for my business as a insert year for 2025, basically.
Totally. Yeah, who cares what I say, right? It doesn't matter. I'm just trying to inspire you. Like, I'm not trying to be that guy, but don't trust me. Go and ask AI. Go and ask free ChatGPT. If I was a good marketer, what would I do? Here's my business, and just see what it says. And hopefully it'll say some of the things I said, but just go and execute that plan. It's a no-brainer to me.
Yeah. No, it's unbelievable. Social media posts. Here's a fun fact too. I mean, my son's playing Little League and stuff, and we're even like creating like social media posts for the one page. That's all done with AI, and it's humorous because you ask them, write a humorous post about a hot day, playing Little League baseball game. It's incredible the stuff that's coming up. So you can absolutely use all of this stuff in your marketing for your business, for your investments, and so forth. You're doing live events. How is that still going? What are you seeing in the live event space? And you also attend quite a number of events, and you're a very requested speaker. Tell me a little bit about that, and what are you seeing in that part of the universe?
So look, number one, being a good speaker, especially a top 1% speaker, is another very high leverage activity. And so if you're listening to this and you're just in the world of business or finance or investing, and a lot of this hasn't resonated with you because you don't think it applies to you, it almost certainly does. And especially if you think, I never am the person that wants to be out there in front of everyone, then it even more applies to you. Because usually the people in the world of investing and money, the ones that really succeed over the long term are far more analytical. But the analytical ones must rise to the occasion to be a louder version of themselves in order to not get totally ran over by the good marketers, who are, by the way, idiots. And so that's what I believe I'm here to do, is to call you out, those engineers, those brainiacs, the people that struggle with imposter syndrome. Y'all are the smart ones. That's why you struggle with imposter syndrome, because you think of all the ways things can go wrong. I'm not going to name any names, but there's people out there that don't think about stuff like that and are just loud. And guess what? They're winning in the short term. So in order to beat them, and in order to make sure that your investors don't invest with them, you've got to start implementing some of this stuff. And now one of those things is to become a great speaker. And that's how you get invited to speak at great events. I mentioned one of the events we're doing, but I've been able to speak at some, industry leading events with thousands of people. But I got to tell you, this was something that didn't come naturally to me. I spoke once at an event and I was accidentally given the votes of who were the best speakers of the event. And I was like bottom 30%, 2018. And I thought I killed it. And so I had to just take an honest look at it and be like, what am I doing wrong? I got to start from square one. Who were the top 5 speakers? What were they doing? What was the cadence? Did they open up with a joke? How frequently did they tell stories? I had to reverse engineer what it meant to be a good speaker. And one of those people that I look up to and did at the time and truly modeled was Neil Bawa, probably the number one most sought after speaker in the real estate niche. And I modeled him to a high degree and eventually was asked to speak at that same conference in 2020. And I spoke twice. Once was a keynote, once was a panel, and both of my sessions were in the top 5 of the conference, including billionaires, centimillionaires, owners of bigger pockets, major players that I respect. And it was because of hard freaking work. Now, when you hear this, maybe it comes off like I'm a confident speaker, and that is true, but there's a massive amount of intentionality to this. And I know that I'm being long-winded, but I just have to bring this point home. If you know who Neil Bawa is, and if you listen to him speak, it sounds like it's effortless. And I asked him about it, and he goes, bro, English isn't my first language. You think this is easy? And I was like the massive unlock for me. So to me, that's the opportunity for everyone. And it's always going to benefit you.
You know, it's funny that you just mentioned that because, yeah, I mean, English was my second language too. And even though I've been in the United States since 2001, and obviously now that this is my first language, sometimes when I'm put on the spot, when you're, yeah, I guess, how am I trying to say it? When somebody just basically puts you on the spot, my default is still to think sometimes in Afrikaans before I respond in English. So
Wow.
it's funny. So I prepare for a lot of stuff too, for all different types. And to your point, when you hit that, the intentionality of it, yeah, that is. I mean, that's why you got to be very intentional. None of this stuff is. All the people that make things look easy are just people that have intentionally honed their craft, tried every day to get better, and this has been practice and practice and practice and practice, eventually, so that it almost becomes second nature and it looks that naturally, right?
Absolutely. And usually what it is people assess their strengths and they lean into their strengths. And then over time, if they compound and they want to master it, it looks like they've run circles around everyone. But if you go back and look at them, the stories are very similar to Kobe. Like, was Kobe the best basketball player when he was 17? No, he was just a freak talent. But dude, he didn't quit. And if you've heard his interviews and talked about his bio, he realized the game of the NBA quickly was people are there to make money. And when they make money, they stop focusing on mastery and intentionality and they stop waking up at 4. And he was like, oh, this is going to be easy because I don't care about making money. Watch what happens. And you saw what happened. There's plenty of stories of people that were in training camps with Kobe being like, we were on par for 6 months.
Yeah. No, absolutely. So 2025, the year ahead. What are you seeing the first couple of months? We've got a change in administration, and then how does the rest of the year look?
So to me, this is the massive opportunity that I've been waiting for. You heard a lot of market movers and economists talk about survive until 25. And in all fairness, it might be a little misleading. There's still a lot of headwinds and there's still a lot of deals that are going to be sold at ridiculous discounts. But this is the time that you're going to buy those deals. And then in 2027, I think it's going to be so obvious that it's the kind of thing people will try to not give you credit for on your track record, right? Because I've been in the business for a long time. I know that the deals that we bought in 2012, basically people would be like, yeah, but like, was it really you or was it the market? And I get that. But like, I was the one making a decision to do that at the time when everyone was telling me I was crazy pants. So to me, 2025 is kind of a similar time where you want to put a $20 million property under contract. Good luck. You got to raise $10 million, right? But then if you do it, that month 1, that month 10, those, I just have seen this story before. And I think that by the time we get to 2027, when development falls off a cliff, it's going to be just too obvious. And of course, you did great deals back and then, but anyone could have. Great. That's the kind of deals I want to do.
And you got to give credit where credit is due, right? The guys that came in for Bitcoin at around 15K too, that came in pretty heavily when everybody said it's over. I mean, they're sitting smiling like Cheshire cats right now, and you got to give credit where credit's due. They kind of knew how the cycles were going to play out and what is ahead, and that there's a lot of juice still left in this and a lot of things to play out. So now it's easy. People say, well, they just got lucky. No. They were very strategic. And it's the same thing with, with your targeted approach, that it's very strategic and very specific markets right now of where the opportunity lies, because of that window, as you mentioned, probably gone a year or 2 years from now.
I think so. I can tell you the deals we're looking at right now, all the metrics you would use to decide if a deal is risky or not, they're cranked the opposite direction. But it's not just that like we're smart. It's just that's because there's distress, there's hesitation, there's a question mark at every single corner. In 5 years, maybe 3 for sure, you have to crank those metrics up because other people are willing to do so. And then you're left the decision of, should I sit on my thumbs or should I do a deal? And if you're going to participate, you've got to look at it like that. So to me, it's like when I was younger, I was like, dude, this is going to be easy. I'm buying deals in 2012. But I didn't just get wiped out because I was in college, right? So I try to be humble about that reality, that it's not just me being the smartest guy in the world. It's just markets mess with your mind. They also mess with your bank account, but use whatever is at your disposal. As an example, I talked about trends before. I was not, even though I'm a libertarian and I got word of Bitcoin early, 2012, 2011, I was not in a place where I was willing to take that risk from an unknown standpoint, a reputational standpoint. So I missed that insane opportunity. But that's not a tool that I had at the time. I did have a reputation, so I didn't want to lose my reputation. But if you're like, you know what, this is my time, I can go all in when everyone else is worried about their reputation. Find that thing, do whatever it takes, and go all in. That's my message.
Awesome. Hunter, where can folks follow you? Where can they get in touch? And where can they stay informed of all the many things that you've got going on, books and Asym Capital and Raise Masters and so forth? My
man. So number one, it's been an honor to be on. You've had some freaking legends on, and I can't even mention them all, but I'm very grateful. And it's awesome to watch you do what you've done. So good job, buddy. It's insane. And for the listeners, I'm also very grateful because you're the reason that he's able to get these incredible guests. I mean, he's a nice guy, but people come because of the audience. And so we're grateful for you, both of us. If you want to learn more, go to raisefest.com. That's where we're going to have this event. My company is raisingcapital.com. If you're a passive investor, you want to look at some deals in Phoenix, Arizona, asymcapital.com.
Awesome, Hunter. So awesome to speak with you. Thank you so much for coming on the show again. And as always, providing so much value for all of my listeners and my viewers.
My man. Talk to you soon.
And thank you to all of my listeners and my viewers for again spending the most valuable resource, your time, once again with me on the show today. Everything Cashflow Ninja is at cashflowninja.com. We've got over 1,000 podcast episodes, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter and the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.